This is Trade Flow News, bringing you relevant news and insights from around the world. Trade Flow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russia's government lifted a temporary ban on the bulk of gasoline exports supplied by producers, while extending the restrictions for other exporters, such as independent traders and resellers, until January 31, 2025, it said on Saturday. The initial ban on gasoline exports was set to expire at the end of this year. The ban does not include supplies to the Moscow-led Eurasian Economic Union of some former Soviet states as well as countries, such as Mongolia, with which Russia has intergovernmental agreements on fuel supplies. The decision was taken to maintain a stable situation in the domestic fuel market, support the economy of oil refining, and counteract grey exports of motor gasoline, the statement says.
Oil prices rose on Monday, supported by strong factory activity in China, the world's second-largest oil consumer, and heightened tensions in the Middle East as Israel resumed attacks on Lebanon despite a ceasefire agreement. Brent crude futures climbed 57 cents, or 0.79%, to $72.41 a barrel by 0700 GMT, while U.S. West Texas Intermediate crude was at $68.58 a barrel, up 58 cents, or 0.85%. Oil prices have managed to stabilize into the new week, with the continued expansion in China's manufacturing activities reflecting some degree of policy success from recent stimulus efforts, said Yip Jun-rong, market strategist at IG.
Moving on to the top news in the energy sector.
Russian gas exports through Ukraine to Europe were down more than 3% on Sunday and Monday from levels seen in recent months, while nominations for Gazprom from Slovakia were stable, data from Gazprom and a pipeline operator showed. Russian gas producer Gazprom said it would send 40.8 million cubic meters, MCM, of gas to Europe via Ukraine on Monday, up from 40.6 MCM on Sunday but down from more than 42 MCM seen in recent months. Russia halted gas supplies to Austria's OMV in mid-November due to a contractual dispute and a court decision to award the Vienna-based company €230 million, $242 million, in connection with irregular supplies to its German unit in 2022.
Saudi Arabia clawed back market share of Asia's crude oil imports in November, while Russia surrendered some of its barrels in what may be an early sign of a shift in market dynamics. Asia's imports from Saudi Arabia, the world's biggest crude exporter, rose to 5.83 million barrels per day, BPD, in November, up from 5.28 million barrels of oil per day in October, according to data compiled by LSEG Oil Research. Meanwhile, Russia's supplies to Asia, the top importing region, dropped to 3.51 million barrels of oil per day in November, down from October's 3.96 million and the lowest since January, according to LSEG. Next, we have the top news in metal markets. A small left-wing environmentalist political party in Norway succeeded on Sunday in blocking plans to mine the seabed at the bottom of the Arctic, by demanding the government scrap its first licensing round in return for support for the budget. "We are stopping plans to open mining on the seabed," Kirsti Bergstø, leader of the SV party which is outside the governing coalition but supports the minority government, told reporters. The government, which had planned to offer its first deep-sea mining exploration permits in the first half of 2025, said that although the plan was suspended, preparatory work would continue, including creating regulations and mapping the environmental impact.
Copper prices edged lower on Monday, pressured by a stronger US dollar, shrugging off signals of optimism in China with latest economic data showing a slight uptick. 3-month copper on the London Metal Exchange slipped 0.5% to $8,967 per metric ton by 0713 GMT. The most traded January copper contract on the Shanghai Futures Exchange fell 0.07% to 73,720 yuan, $10,144.91, a ton. The dollar pushed higher again in what is shaping up to be a critical week for the prospect of U.S. rate cuts, while drawing verbal support from President-elect Donald Trump.
We will now look at the top news in the agricultural sector.
Ukraine has introduced a new system for exporting key agrarian goods, including grains, which implies a ban on exporting consignments of goods at prices below those set by the Agriculture Ministry. Ukraine is a global major grain and oilseeds grower and exporter, and the new system became operational on December 1st. The government launched the plan to tackle price distortions linked to Russia's invasion, which has seen an increase in domestic cash purchases of some agricultural products and their subsequent export at artificially low prices to avoid taxes.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.